I'm Daryl Jones, Director of Research at Hedgeye Risk Management, and I'm here with a macro minute today on oil. There are three things I wanted to touch on oil. The first thing is U.S. supply, the second thing is Iraqi production, and then the third thing is our quantitative levels. Starting with U.S. supply, we're literally at all-time highs in U.S. supply going back to the 1930s. This week we had a build of about 1.3 million barrels, which was a little less than consensus, but you have to remember last week we had a build of more than 10.5 barrels. At some point in the next 4 to 6 weeks, we're literally going to be out of capacity to store oil in the U.S., and that's obviously very bearish. The second thing on oil is Iraqi production, and this is more of a longer-term data point, but Iraqi production's grown from 2.5 million barrels a day to 3.5 million barrels a day in the last 5 years. The Iraqi government thinks that over the course of the next 10 years, they can get production up to 9 million barrels a day. And on some level, this makes sense given they have the 5th largest reserves in the world. If they get anywhere close to that, it's very bearish long-term for oil. And the third thing for us is just our quantitative levels. Despite some positive volatility in oil, the price has gone up a little bit in the last few weeks. Longer-term oil to us is still broken. The trend level for oil is 57.54, and then the tail level for oil is 72.12. So we don't get more bullish on oil until oil breaks the 72.12 level, and longer term we'd probably change our view on oil, but until then we remain bearish. And I'm Daryl Jones, Director of Research at Hedgeye with a Macro Minute on oil.